All right. Continuing the second part of Hart here, the focus is to finish the few risks that are remaining. Along with that, we'll finish substantive procedures and we'll also finish the last part here of the question, with regards to conflict of interest. We'll look there shortly. However, we'll get started here right now with the rights issue. So let's get a strong understanding about rights issue and understand what's really happening here, what's really going on here, and let's complete the question. Okay, so starting off with this. Looking into the risk now. The last class we have finished till PPE, and we look into the case right from there, from where we have finished. So we know the format. First, we identify the risk. Second, we explain why it is a risk. Okay. Then we give the impact, and then we give the auditor action or the auditor response. Okay. So this was our template as to how we went about. So let's get started here from the rights issue perspective. So when we look into the rights issue here, first we are identifying the risk. Okay. When we look into the rights issue, first we are identifying the risk. So in 2005, the company contracted, we finished this part here, in order to finance the research and development and the machinery purchase. Hardcore made a rights issue. What did the hardcore do? It did a rights issue. What did hardcore do? It did a rights issue. What did hardcore do? It did a rights issue. What did it do? It did a rights issue. So the rights issue is a risk. Why is the rights issue a risk? Why is the rights issue a risk? Okay, why is the rights issue? Why is the right issue a risk? So they can do, but what is the risk about that? Right? That incorrect accounting and disclosure of the rights issue. Right? The rights issue, you have to make sure that you have to do proper disclosures. Right? There has to be proper disclosure. There'll be certain amount that goes to share capital. There's going to be certain amount that will go to share premium. There's a risk that they would have not done that kind of proper accounting. Right? In whenever you do a rights issue, some part of it goes to share premium. Okay. So the rights issue has been made at a premium. Okay, and therefore requires the split into share capital and share premium. It requires the split into share capital and share premium. It requires the split, right? It requires the split between share capital and share premium. Okay, the rights issue has been made at a premium, and therefore, okay, made at a premium, and therefore it requires to be split into share capital and share premium. It needs to be split between share capital and share premium. Okay, that is the risk. The rights issue has been made at a premium, therefore requires to be split into its share capital and share premium. This split needs to be there. What needs to be there? The split needs to be there. Right. The risk is that they would have not done the split. Right. The risk is that the split or share capital has not been done correctly. Right. And these balances are misstated. These are the risks. Right. The rights issue has been made at a premium, and therefore requires to be split into share capital and share premium. Right. There's a risk that the split would have not been done correctly. What is the risk? That the split has not been done correctly. Right. There's a risk that the split has not been done correctly. Also, there is a risk that the rights issue have not been disclosed also. In accordance with the standards, they have not even disclosed it. You have to disclose also the rights issue. That is also a risk that they have not even disclosed it. Right. What they have not done is that they have not even disclosed it. Okay. There's also a risk that they would have not disclosed it. Right. What is the impact? What is the impact? The impact is that these balances are misstated. What is the impact? These balances are misstated. What is the impact? The impact is that these balances are misstated. What is the impact? These balances are misstated. Yeah, these balances are misstated is the impact. What is the impact? These balances are misstated. Yeah, these balances are misstated. Yeah, the impact is that these balances are misstated. The impact is that. Okay, there's the impact. Okay, the impact is that. Okay. These balances are misstated. There's also a risk that the rights issue has not been disclosed in accordance with the accounting standards and local company legislation. Okay. These balances are misstated. The problem is they have not done the split. Okay. They have not done the split. Okay. The issue is that they have not done the split. The issue is that they have not done the split correctly, and that's why there's a misstatement. Along with that, they have not even made the disclosure. That is the risk. They would have not even made the disclosure. What is the risk? They would have not even made the disclosure. Multiple risks here. So the solution, what can you do? The audit team should obtain a legal documentation in support of the rights issue to agree the number of share price and the rights issue. So first of all, what you should do as an audit team, obtain the legal documentation and agree the number of shares, first of all. Right? And the rights price, at what price and how much? At what price and how much? At what price and how much? Look into at what price and how much. At what price and how much? At what price and how much? Just look into that. At what price and how much? Okay, at what price and how much? Right? They should recalculate the split of share capital and share premium and agree the journal entry to record the rights issue. Right? You should recalculate the split. Ensure that the split is recalculated. Recalculate the split. What you should do is you should recalculate the split. Right? The audit team should also agree that disclosures are adequate and consistent with standards and legislation. Right? What you should do, you should also agree that disclosures are adequate and consistent with the standards and legislation. That is, the audit team should also agree that disclosures are adequate and consistent with the standards and legislation. You should also ensure that the disclosures are adequate and consistent with the standards and legislation. You should also agree that the disclosures are adequate with the standards and legislation. So firstly, obtain legal documentation in support of the rights issue to agree the number of shares and the rights issue. Second, recalculate the split of share capital and share premium and agree this to the journal entry. Next, the audit team should also agree that disclosures are adequate and consistent. Second, you have to also agree that the disclosures are adequate and consistent. You should also agree that the disclosures are adequate and the disclosures are consistent. You should also agree that the disclosures are adequate and consistent. Okay, you should also ensure that the disclosures are adequate and consistent. Okay, second thing, you have to ensure that the disclosures are adequate and the disclosures are consistent. Right, you have to ensure that disclosures are adequate and the disclosures are consistent. Very important. Okay, so this is about the rights issue. Nothing complicated, straightforward, but you have to just ensure that the split is done correctly. If not, discuss with them and request them to do it correctly. If you have found out after it or talking to them after discussing with them that the split has not been done correctly. Okay. Next, we look at the second risk here. The payroll function is outsourced to external service organization, right? So whenever you put something to an external service organization, as an auditor, it becomes hard to audit it, right? So whenever you outsource something, it becomes hard to audit it, right? It increases your detection risk. Right, what it does is it increases the detection risk. It becomes hard to audit. Right, induction as to whether sufficient appropriate is available. Right, and sufficient risk arises. Right, as to whether sufficient and appropriate evidence is available and ADCO to confirm the completeness over the payroll cycle. Right, right. The risk is that you're not sure about sufficient and appropriate evidence. You don't get enough evidence because it's outsourced. Right, when it's outsourced, you do not get sufficient evidence. Right, so the problem is that if errors could have occurred, these could result in wages and salaries in any accruals. Consideration should be given to the level of controls in place at the service organization where the data is reliable. If any errors have occurred, this could result in the wages and salaries could be wrong. So what you have done is your payroll you've outsourced. Now the problem is I am the auditor of the company. I can't go and check the outsourced company. Right? I can't go and check the outsourced company. But what I can do is I can connect with the auditors of the outside company and ask for a type 1 or type 2 report. Right? I can connect with the auditors of that outsourced company. What I can do is I can connect with the auditors of the outsourced company, right? What I can do is I can connect with the auditors of the outsourced company, and either I can request for a type 1 report or a type 2 report and connect with the we are coming with the auditors of the outsourced company and ask for a type 1 report or a type 2 report. First, I can discuss with the management any changes in the extent of records maintained at Hardco. Are there any changes in the extent of the records? Right? Were there any changes in the extent of the records? I can ask them what the changes with regards to the extent of the records. Okay, consider the extent to which sufficient appropriate evidence can be obtained. Consider the extent to which sufficient appropriate evidence can be obtained from records. Right? How much evidence you can get from the records at Hardco. Right? Consider the extent to which sufficient appropriate evidence from Hardco only can you get the evidence. Right. So firstly, what you can do, discuss with management any changes to the extent of records maintained at Hardco since the prior audit and any monitoring of those controls have taken place. Second, what you can do is you can reach out to the auditors of that outsourced organization. Of that outsourced organization, you can reach out to the auditors and ask them that to issue you a type 1 or type 2 report, that they'll give you an idea about the controls at that particular company. Right, I have outsourced to someone else, but my auditor cannot outsource that other company because he's my auditor. He can't go and ask them for information. But what my auditor can do is he can connect with the auditor of the outsourced organization and ask them for the clarity. Right, ask them for the clarity about a lot of things. Right, about the controls, their effectiveness, the design, and everything. So they can ask for type 1 or type 2 report, whatever the auditor can provide. And along with that, you can consider the extent to which sufficient audit evidence can be obtained from the records. From the records held at Hardco, how much evidence can you get at all, if at all? Next, director's remuneration. Right. So Hardco directors disclose the remuneration details in the forecast financial in accordance with IFRS. However, local legislation in the country in which Hardco is requires more extensive disclosures. So directors have stated that they consider onerous and so do not intend to provide additional information. So the remuneration disclosures have been made in line with IFRS but not local legislation. So what is the risk here? That you have disclosed as per local legislation, but you have not done it as per you have done it as per IFRS. You have not done it as per local legislation. What you have done, you have made your disclosures. What you have done is you've made your disclosures as per local legislation. You've made your disclosures as per local legislation. But what you should do is you should make your disclosure as per IFRS. What you should do is you should make your disclosures as per IFRS. But what you have done is, okay, you have made your disclosures as per IFRS. And what you should do is you should make your disclosures as per, what you should do is you should make your disclosures as per IFRS. But and you did that, but what you should have done is also consider local legislation. Where local legislation is more comprehensive, you have to follow the local legislation, right? Why is the risk? Wherever local legislation is more comprehensive than IFRS, you have to follow the local legislation. So as a result of that, your disclosure is incomplete, right? Your remuneration disclosure is incomplete. If you have not disclosed the additional information, your disclosure is incomplete, right? If you have not disclosed the additional information, your disclosure is incomplete. So what you can do is discuss the matter with the management. Second, review the requirements of local legislation to determine if the disclosure in the financial statement is included appropriately. Firstly, discuss this matter with the management. First, what you have to do is discuss this matter with the management. Second, review the requirements of local legislation. Firstly, discuss this matter with management, and second, review the requirements of local legislation to determine if the disclosure in the financial statement is included appropriately. The firstly, discuss the matter with the management. Second, review the requirements of local legislation to determine if the disclosure in the financial statement is included appropriately. Right? Is the disclosure even appropriate? Right? So discuss with the management and review the requirements of the local legislation. You see what you should be doing. As per local legislation, what you should do. Look into that. As local legislation, what you should do. As per local legislation, what you should do. Right? Look into that. Right? First, you discuss with the management. Second, you see as per local legislation, what you should have done. Now, second, you see as per local legislation, what you should have done. As per local legislation, what you should have done. Second, you look into that as per local legislation, what you should have done. Okay, as per local legislation, what you should have done. Okay, as per local legislation, what should you have done as per local legislation? Okay, as per local legislation, what should you have done? Let's look into that. As per local legislation, what you should have done. First, discuss the remuneration disclosures have been made in line with IFRS, but not local legislation. Second, where the local legislation is more comprehensive, what you should have followed is local legislation, not the IFRS, where it's more comprehensive. Hence, if since here they have not done the disclosure as per the local legislation, the remuneration will not be complete, and their disclosures are not going to be the remuneration disclosures are not complete. Right. So what you should do is firstly discuss with management. Second, review the local disclosures and determine if the disclosure in the financial statement is included appropriately. Okay. And if the disclosure in the financial statement is included appropriately, look into if the disclosure in the financial statement is included appropriately. If the disclosure in the financial statement is done appropriately, if the disclosure is done appropriately, you have to look if the disclosure is done appropriately. Yeah. You have to look if the disclosure is done appropriately. Right, you have to look into if the disclosure has been done appropriately. Okay, so that is another important thing. Has the disclosure been done appropriately? Yeah, that is another important aspect. Moving on now. This is the end of the audit risk side of the questions. Now we'll look into substantive procedures and the second part here. Two parts of the questions are done. Another two parts are remaining. So let's look into from an audit substantive procedure perspective. Okay, so what is the question? First, let's look into the question. Substantive procedures should perform in order to obtain sufficient appropriate evidence in relation to bonus. So in director's bonus, okay, you're looking into director's bonus. Okay, in respect of director's bonus, you're looking into okay, director's bonus, what you can do. So whenever you have to do substantive procedures, you have to do action, source, purpose, and objective. Okay, four things you have to write. Okay, purpose, action, source, purpose. Okay, so whenever you write substantive procedures, you have to break it down into action, source, and purpose. Okay, what you have to do is you have to break it down and you have to write it on action, source, and purpose. Okay, what you have to do is always break it down into action, source, and purpose, and you'll see how easily you will understand substantive procedures. So that is the trick. Okay, action, source, purpose, or objective. Okay. Let's look into the first one here. Firstly, what do you have to do a substantive procedures on? You have to do it on director's bonus. So you look into the first procedure, obtain a schedule of director's bonus and cast it. Okay. So what is your action? What is your action over here? Okay. So you're looking into multiple aspects here. What is your action? So what you will do is you will obtain a source of director's bonus and you will cast it. Right. First you will obtain a director's bonus, schedule of director's bonus, and you will cast it. Right. So what you will do is you'll obtain a schedule of director's bonus and you will cast the schedule. What you will do, cast means you will add it up, right? To ensure accuracy. Why are you adding it up? Why are you adding it up? You want to ensure it is accurate. Why are you adding it up? To ensure accuracy. Okay. But from where will you get the information? From where will you get the information? What is your source? Schedule of the director's bonus. It's a list of the director's bonus. Okay. So what are you going to do? First, you'll obtain a schedule of the director's bonus. So from where you will get the information, always think about that you're telling a junior how to do the task. You're explaining it to a junior. You're explaining to the junior how to do the task. You're explaining it to the junior how to do the task. Right? You're obtaining it to the junior. You're explaining to the junior how to do the task. First, what you do, you take a schedule of the director's bonus. Right? It's a list where all the director's bonus is prepared by the management. Everything will be written there. Then what you do is you test the mathematical accuracy and completeness. Right? Test the mathematical accuracy. What you will do, you will cast it. Cast means what? You will add it up and you'll test the mathematical accuracy. Why? Because you want to ensure that the bonus in the financial statement is arithmetically accurate. Right? Because you want to ensure that in the financial statement, whatever bonus is given, it is arithmetically accurate. Right? It is arithmetically accurate. So action, source, and purpose. What is your action? You will cast. What is your source? From where? From the schedule of director's bonus. And why? To ensure it's accurate. Right? So action, source, and purpose. So next we'll look one more. What is your action? Right? What is the action that you're doing? That you're gonna review. Okay, what are you gonna do? You're gonna review. Second case, what are you gonna do? You're gonna review. Okay, what is your exact action? You're gonna review. Right? From what are you gonna review? Right? What are you gonna review and why are you gonna review? Right? What are you gonna review and why are you gonna review? Okay. What are you going to review and why are you going to review? So you're going to review the schedule of current liability. So this is the source, right? So action is in pink. So let me just put it in pink. So what are you going to do? You're going to review. Okay. What are you going to review? From where you will get the information that you have to review? From a schedule of current liabilities. Okay. From the schedule of current liabilities, what will you do? First of all, what is your action? Action is review. What is your action? Action is agree. What is your action? Action is recalculate. What is your action? Action is to confirm. What is your action? Action is to compare. What is your action? Action is to agree. What is the action? Action is to review. What is the action? Is to obtain. What is the action? Is to review. Right? First you will take your actions. Okay. Then from where? Right? You'll do the action, but on what? And from where will you get that? Right? So here the schedule of current liabilities. Okay. So here from the post year end records you will get the information. Okay. Here you will get the information from supporting documentation. Here you will get the information from post-year bank ledger account and the bank statement also. Next here you will get the information, right? The profit bonus calculation to the profit before tax figure to confirm whether any adjustment is required to the bonus pay, discuss any differences. So the final profit before tax figure in the financial statements, the draft financial statements, you can get it from there, right? In the board minutes, you will get the information. In the contracts, you will get the information. And you have to see if anything is included in the current financial statements. So these are the documents that will be in your hand. Then review the board minutes. Again, board minutes you're reviewing. Okay. Then obtain the written representation. Yeah. Obtain the written representation.
Recording in progress.
Okay. Then yeah. Second, obtain the written representation. What you're doing is obtaining the written representation. Second, you're going to review the disclosures made. What are you reviewing? You're reviewing the disclosures made. What are you reviewing? You're reviewing the disclosures made. What are you reviewing? The disclosures. So again, I'm just trying to highlight over here that you need an action, you need a source, and you need a purpose. Right? You need an action, source, purpose. Okay. And along with that, an objective. Action, source, purpose, objective. Right? So over here, the objective in this, you will see oftentimes objective might not be very clear, but again, how we will study, we will try to always keep the objective also clear, right? So now let's come to each of them and look into the purpose. So first we have the action. Action is review. What are we going to do is we are going to review. Action is what are we going to do? We're going to review the schedule of current liabilities and confirm the bonus accrual is included as a year-end liability. So first of all, what are you going to do? You're going to review the schedule of current liabilities. Okay, why? To confirm that the bonus accrual is included in the current year liability. That you have included the bonus accrual. Accrual means anything that has been event has happened, but the payment has not happened. That is called accrual. When the event has happened, but payment has not happened, cash is not transferred, but event has happened. So what you're going to do, first of all, you're going to review. What are you going to review? Current liabilities. First of all, you're going to review. What are you going to review? Current liabilities. First of all, you're going to review. What are you going to review? Current liabilities. Okay. First of all, you're going to review. And what are you going to review? Current liabilities. And then what you're going to do? You're going to confirm. Why are you going to review the current liabilities? Okay, I am reviewing it, but why? To confirm whether in the current liabilities the bonus accrual is there or not. Okay, I'm telling you, come here, review. Okay, you're like, sir, what do I review? Current liabilities. Okay, sir, but why am I reviewing? What am I looking for? Confirm whether the bonus accrual is there in the current liability or not. Confirm whether bonus accrual is there in the year end liability or not. Confirm whether the bonus accrual is there in the year end liability or not. Well, first thing. Second, agree. What are you going to agree? Okay, I'm telling you, agree means just take two things and see if it's there in each. One is there in here, one is there in here. Agree means it's there in one document, it should be there in other document also. Agree. What do you want to agree? Individual bonus payment. Okay. I will agree. I have individual bonus payment in a book I have, but what am I agreeing it to? To the payroll records. That in that book in which whatever you pay to employees, you write it down. Individual bonus payments you will get in the bank statement of the company because the company would have individually paid people, or you can get it in the bonus book if there's anything where they mention all the bonus books, right, in the where they keep a track of all the bonus. Ensure that the individual bonus payments, a list of how much, you can just get a list, a document, how much you paid this x, how much did you pay y, how much did you pay z, how much did you pay bonus to everyone. You get that list, compare that list to the payroll records of the company, compare that list to the payroll records of the company. You'll get that list. You'll get that list wherein how much bonus you paid to everybody. That list will be there. Compare that to the payroll records. Why? Just to see that it's the correct amount has been entered in the books also. And what is in the books, that much only has been paid. You not paid over, you don't not paid under. Next, recalculate the bonus payment and agree to the criteria. So see, bonus also you get on criteria. Simply you don't get bonus. Right? So what you have to do is recalculate. What have to recalculate? The bonus. Okay. And agree to the support criteria. Okay. To supporting documentation. But why? Just to ensure that the correct bonus has been calculated and the percentage rates to be paid to the director service cost. Again, why? In certain here you will see the why is not written, but we have to ensure that we learn the why. What are you going to do? You recalculate. Okay, what are you going to do? You're going to recalculate. Yeah, what are we going to do? Yeah, what are we going to do? We're going to recalculate. Okay, what are we going to do? We're going to recalculate. First thing, what are we going to do? We are going to recalculate. Okay, what are we going to do? We are going to recalculate. First thing, what are we going to do? We are going to recalculate. Okay, what are we going to do? We are going to recalculate. What are we going to recalculate? We're going to recalculate the bonus payments. Okay, I will recalculate. I will do it again. 2 plus 2 is equal to 4. I will recalculate. And then after I have recalculated 2 plus 2 is equal to 4, I have recalculated. Okay, then what do? I got 4. Yeah, so what? Then I will agree to the criteria to supporting documentation. I'll look into the supporting documentation where the announcements would have made of the bonus, an email would have been sent, a circular would have been distributed, that what were the criteria for the bonus? When will XYZ get bonus? What is the criteria for the bonus? So I will first calculate the bonus. Then I will ensure that the criteria for the bonus has been satisfied or not. I'll agree that calculation to the documentation where all the terms and regulations around the bonus have been clearly expressed, right? So first I took the bonus payment, I recalculated it, and after recalculating, I agreed it to the supporting documentation and the percentage rates to be paid to the director. And what exactly did I check? The how much percentage should be paid to each director, right? What is the percentage rate to be paid? Not every person will get 10%. Some will get 2%, some will get 3%, some will get 4%, some will get 5%. Everyone is not getting the same amount, right? Everyone is not getting the same amount. Okay, everyone is not going to get the same amount. So what we have to do is that we have to recalculate the bonus payment and ensure to supporting documentation. We have to, after calculating, we'll look into the supporting documentation and see if the correct rate has been taken. We will see if the correct rate has been taken. We'll look into that and we'll see if the correct rate has been taken. Okay. Next, confirm the amount of each bonus paid by agreeing the post year and bank ledger and bank statement. What am I doing? The amount of each bonus paid. I'm confirming the amount of each bonus paid by agreeing to the post year end bank ledger and bank statement. I'm looking into the ledger account, which is the books of account, and the bank statement is the statement given by the bank. This is the statement given by the bank. I'm looking into both these statements. I'm looking into both these statements and I am comparing if the correct amount has gone. Easy. The amount of bonus paid by agreeing what? Bank statement and the ledger account. You look into the two and just make sure that the correct bonus has been paid to everybody. No problem. Next, compare the profit before tax in the bonus calculation. Okay, in the bonus calculation, what profit before tax you took to the profit before tax figure in the P&L to confirm whether any adjustment is required to the bonus paid. Okay, whether any adjustment is required. Why you're doing is to make sure whether any adjustment. So what I tell the junior, come here. Okay, and I told him to compare. Okay, what sir, what should I compare? Compare two things. That in the calculation, what profit before tax has been used, and in the P&L, what is the profit before tax? Right, and after comparing, if it is the same, okay, but if it is not, let me know and I will have to discuss this with management why it is not the same. A. B, look into it and just see if any amounts they missed, any expenses they missed, any adjustments is needed or not. Anything that they miss, any adjustments are needed or not. Anything that they missed, any adjustments are needed or not. You look into that. Next, finally, agree the amount paid to each director to board minutes and contracts to, first of all, agree the amounts paid to each director, right? Agree the amounts paid to each director to board minutes and contracts. So how much ever amount you have paid to each director, agree the amount that has been paid to each director to the board minutes and contracts to ensure the amount included in the current year financial statements are fully accrued and it is disclosed. Okay, I'll tell the junior, come here. Okay, then sir, what should I do? I'll tell you, you have to compare. Okay, or you have to agree in the sense that you have to look into two documents and see what is the amount. Okay, then sir, watch two documents. What two documents? So first you take the amount paid to each director, you take that in one hand, and in the other hand you take the board minutes and contracts in the other hand, and ensure that the amount that has been paid has been the one that has been discussed and it has been correctly recorded. The correct amount has been paid to ensure that the amounts that have been paid are the correct amounts. To ensure that the amounts that have been paid are the correct amounts. To ensure that the amount that have been paid are the correct amounts. To ensure that the amount that has been paid are the correct amounts. Why are you doing all this? Just to ensure that the amount that has been paid are the correct amounts. Okay. Next, review the board minutes to identify whether any additional payments relating to this year has been agreed for any directors. What you have to do is review the board minutes. What are you going to review? Board minutes. What are you going to review? Board minutes. What are you going to review? The board minutes. Why? Why are you reviewing it? To identify whether any additional payments have been agreed for any directors. Board minutes are again all the discussions of the board. So you are reviewing the board minutes. Okay, why am I doing it, sir? What am I looking for? You're looking for if there were any additional payments relating to this year have been agreed for any directors. Any additional payments relating to this year have been agreed for any directors. Okay, whether any additional payments made this year have been any agreed for any directors. Okay, so that is about this. Next, obtain a written representation from the management confirming the completeness from the management. You tell them, write and give me in a piece of paper, right? You obtain a written representation and confirming. They should confirm the completeness of the director's remuneration, including the bonus, right? They should confirm the completeness of the director's remuneration before the bonus. Okay, confirm the director's remuneration before the bonus. Okay, confirm the director's remuneration before the bonus. Right, so what you do is obtain a written representation. What are you getting? A written representation from the management. Okay, why? Confirming the completeness of the director's remuneration, including the bonus. They should confirm that yes, X should get this much, Y should get this much, Z should get this much. They should confirm. Okay, finally, review the disclosures. What are you reviewing? Disclosures. Sir, why are you reviewing? To ensure regarding the bonus paid to directors and assess whether they are in compliance. Right, look at the disclosures and that has been made regarding the bonus paid to directors and assess whether it's in compliance. So, sir, why am I looking into the disclosure? Just to see if it is done as per the local legislation. Just to see if it is done as per the local legislation. Whatever the local legislation requires, has it been done as per that? Whatever the local legislation requires, has it been done as per that? Okay. Before that, obtain a written representation from the management so that the management is confirming that yes, director X should get this much, Y should get this much, Z should be get this much. Before that, review the board minutes. Why am I reviewing the board minutes? To identify whether any additional payment should be made to any director. Has it been agreed or not? other than the salary, that is the bonus. Second, agree the amount that is paid to each director. Whatever amount has been paid, you will get a list of the amount that has been paid to X, Y, and Z, and confirm that amount to the board minutes and the contracts to ensure that the amounts included in the current year financial statements are accrued and disclosed. It's the correct amounts, it's the right amounts. Before that, compare the profits before tax that is used in the calculation with the profit in the tax that is then the P&L, and see if any adjustments are needed or it's the correct amount. Next, confirm the amounts of each bonus paid by agreeing to the post-year end bank ledger and bank statement. Take the bank ledger, take the bank statement. Okay, compare the amounts. Compare the amounts in the ledger and the statement. Statement is a bank document. Okay, bank statement is a bank document. Bank ledger is a company document. Next, agree the individual bonus payments to the post-year end payroll records. Okay, take individual bonus payments. Agree the individual bonus payments. What you should do is you should agree the individual bonus payments to the post-year end payroll records. Agree the individual whatever list will be there. Compare that to the post-year end payroll record. Like after the year end, the payroll record you should see, and just make sure that the correct amount has been there. It has been recorded correctly. Next, review the schedule of current liabilities. A list of current liabilities, you look there and confirm the bonus accrual is included in the current liability. So what you do is first you get a list of current liabilities. In that you see bonus is there or not. That's all. So whatever you told a junior come here. Okay, he told, okay, sir, tell me what to do. You tell him review. Okay, sir, from what, where should I review? Schedule of current liabilities. Okay, but sir, what am I looking for? The bonus is included or not? That's it. Whether the bonus is included or not. Before that, you will ask, sir, first idea, what you have to do, get a schedule of directors bonus. Okay, I got it. Then you add it up. What you should do, add it up. Okay, why, sir, I'm adding up? Just to ensure accuracy. To ensure accuracy. Why am I adding it up? Just to ensure accuracy. Why am I adding it up? To ensure accuracy. Why am I adding it up? To ensure accuracy. To ensure accuracy. That is a substantive procedures. Okay, that is a substantive procedures to ensure accuracy. Right? To ensure substantive procedures to ensure accuracy. Okay, so that is all a substantive procedures. Again, I know it just took a bit, but as you do, at least every day we are doing substantive procedures. Every day we will do one audit risk and one substantive procedures. And as you do it, you will get a lot more confident. The first one obviously probably would have felt a little difficult, but as you see, there should be an action, a source, and a purpose. Now, like come here. And what you have to do, recalculate. Okay, sir, I'll recalculate. From where will I recalculate? From this document. Okay. Why am I recalculating? To confirm accuracy. There should be an action, there should be a source, and there should be a purpose. Action, source, and purpose. There should be an action, there should be a source, and there should be a purpose. There should be three things: an action, a source, and a purpose. Right? There should always be three things: an action, a source, and the purpose. Okay. There should always be three things: an action, a source, and the purpose. Okay. Very important. Action, source, and purpose. Okay, action, source, and purpose. So that is all about the question of the substantive procedures. So we finished risk and we finished substantive procedures and we finished the planning part. Okay, so planning part we looked into yesterday, but again, focus areas should be there. Again, timely, we should solve everything. Along with that, we have to consider experts also, give direction and supervision to the team members also, and ensure that the team is having proper capability, having proper competence also. Okay, so that is, we looked into the benefit. Then we looked into audit risks here, which we completed today. We're looking into all the audit risk questions, and we finished a substantive procedures. Okay, which again would have felt a little longer, but as you do and you see the repetition going on, that you will see regularly the repetition will be there. A lot of repetition will be there, and you start to get a hang of it. And I have to take an action, and I should have the source, and I should have a purpose. If I have the action, source, and purpose, I will get the clarity. Action, source, and purpose, I will get the clarity. Okay, so that is all about this action, source, and purpose, and I will get the clarity. Okay, action, source, and purpose, we will get the clarity. Okay, there's an action, there's a source, there should be a purpose, we'll get the clarity. Action, source, and purpose. Okay, that is how you do your substantive procedures. Okay, so again, what we'll do is we'll look into one more action, source, and purpose. Let's look into one more. Okay, just in a quick way, just so that you guys see that this is so repeatable, right? Initially, when we do it for the first time, it might feel a little complicated, but let's just try to highlight one more for you, which we'll do obviously, but just for the confidence that yeah, it's not that difficult. You have to just think. Okay, highlighting all the actions. It's not about solving, it's about just me highlighting all the actions. Here you're telling to review. Call a junior, what do you do? Review. Right? Second, what do you tell the junior? Next, cast. That is add it up. Next, you tell the junior recalculate. Then you tell the junior to agree. Then you tell the junior to obtain. Then you tell the junior to review. So see, these are your actions. These are all your actions. But you need a source also. From where should you do it? They will ask you, sir, okay, I will do it, but from where? First case, you tell do it from the board minutes. Second case, you will tell do it from supporting documentation. Next case, you will do it. You can tell it from doing from supporting documentation. Next case again, where you can do it from bank ledger and records. Next case, you're telling obtain a written representation. Next clause, you're telling the disclosure. Right? So you're giving them a source. You're telling them what to do and you're giving them a source also. Right? You're giving them a source also. Okay. And then finally the action. What is the action? What is the reason to do it? Right? Why do you want to know? Why do you want to do? In order to get evidence. Okay. In order to ensure, to confirm, in order to confirm. Right? Why are you doing this? Why? Okay. Right? So here they have not given. But again, you should always try to write it completely. Okay. To confirm completeness. Okay. Yeah. To ensure accuracy. This one. To confirm completeness. Again, there should be a reason to do a task. No, simply you cannot do something. Confirming the completeness. Second, to verify. Again, so you have a reason, right? You should have a reason to do something. Like that only, as you go through enough substantive procedures and you start to see that continuity, that regularity in action, source, purpose, action, source, purpose, action, source, purpose, you will get a lot more confidence. Okay, so the template remains the same. You have to just try to study it like that. And what was the action? I called a junior, I told him to do an action using a certain source for a certain purpose. Okay, for a certain purpose. Okay, action, source, purpose, action, source, purpose, action, source, purpose, action, source, purpose. Okay, so that is all about the question that we've looked into today. If you have